At TheNBI.com, this is John. This report is for the 3rd of January. Well, we had a little bit of softness, but at the end of the day, finished positive. Not really changing much of the outlook, but stronger move of NBI Magenta over yellow and continuation of the NBI white falling. So it's more on the bullish side than not. We would look for at least to move towards that 50%, but we're still getting a rise of short-term, mid-term buyers. But that orange persistent, keeping things in a continuation mode, which has been mostly down to sideways. So it's going to be a tough slug for bulls to keep pushing through that to build some momentum, because it just isn't there. A little bit stronger from the Nasdaq, because you can see that orange dipping hasn't quite crossed the green, but that could happen intraday, and still below the 23%. So again, even if it did pop up, more likely than not, we're likely to see one of those short-lived pops that then retraces back down towards the lower end. We won't know if it's going to be a zero until we get white NBI spike above, because it's already satisfied that 0% expectation when we had the spike over here of the NBI white that led to the move from the 100% all the way back down to the zero, which is precisely what we expected to do. And there we go for TLT. And that was that whole year-end look, showing how significant that was. But we can bring that a little bit closer to present time. Rates continuing to rise as it fades a little bit further there. A little ways more to go, I would think. What the market is going to continue to look for in any rally for bonds and lowering of the yield would certainly come from a recognition that there's a significant slowing. And so I think that's really the impetus the market is looking for, is some kind of indication that the economy is failing, which would give them cause to believe that there will be quantitative easing again, and that will cause the market to skyrocket, or at least believe that rates are going to come down, which would also cause the market to jump. More problematic, oil back above the 80 barrel range. And again, that just presents bigger systemic issues, at least from a liquidity drain, because when energy sucks money away from investment, and that doesn't really do much from an economic standpoint, other than just suck out the livelihood of expansion. And gold continuing that creep up. No shock with that one. We expect 2023 to be a good year for gold. Euro made a nice bounce, but then recognition that there's still problems in the Eurozone, irrespective of the fact that they've been saved by the U.S. Fed. Still causing it to come back, but still we're at 106. That's a huge move from where we were at subpar, with no real material change in what's going on in the Eurozone. Merely just the ability for them to pay for their energy, and that with dollars, without having to sell euros to do it. And that was a big deal, because without that, the euro was in trouble, and they knew it. From a Bitcoin standpoint, more and more people are trying to make the bull case for Bitcoin and some of the others. Bitcoin a little bit less, simply because there's more talk about the EU wanting to ban Bitcoin due to energy use, of course, being environmentally sound that it is. And we're in somewhat of a bicycle setup as it is. I mean, when you're looking at this from a multi-year standpoint, is it a bad time to have a little bit exposure to Bitcoin or an ETH? Probably not. I mean, most of the significant carnage has taken place, and now you just have bigger holders. And interesting thing with that is lower volumes, and that means you can get more significant moves. And when those moves take place, you could generate some excitement, and you could see things explode quite a bit. If we pull that down all the way to where we are, actual close, we're closer to 63%, almost 64% decline from its peak at the beginning of last year. And that's even lower because in December of that year, we have been the year before, it really took a significant plunge prior to the start of the year. and there's ETH literally doing the same thing. And we're within these buy configurations, but when you see a shakeout this low, it's pretty hard to gain a significant amount of momentum. Any buy that's likely to come through is going to hit some resistance at 50% and probably come back a little bit before making another leg. And that would just be kind of a typical move. And this is what I got on the recycle for 50K and my 5K chart. So lovely TS setup again on that situation. Either way, pretty soft opening to the year. I think everyone's just going to be waiting for some of the data to come out. And as soon as it does, then we'll have a little bit clearer picture. I mean, bulls are poised. It's just a question of giving them a catalyst to really make a move. And if there is a significant move, then you might entice some shorts to get back into the market, which that's the real catalyst that is needed to really help drive things further. So that's it for now. But as always, look for me on Skype chat. Trade well. We'll talk to you later.